Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot, and we have an income idea for you. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. The supertanker business has a reputation for being one of the most volatile freight markets in the world, and it's living up to its reputation again. Average spot rates for very large crude oil carriers, also known as VLCCs, tanker that carry 2 million barrels of oil, rose to $83,300 per day. Newer and more fuel-efficient VLCCs are earning up to $100,000 per day. With long-haul rates soaring, it's a great time to look at some of once beaten down oil and gas shipping stocks. After all, investing is all about opportunity, and everything is lining up for a sustained period of growth for oil and gas midstream companies like TORM PLC, traded on NASDAQ under symbol TRMD. John?
Yeah, thanks, Mo. You're correct. TORM is a leading pure play product tanker company with a fleet of 88 vessels designed to be configured to move gasoline, naphtha, diesel, and jet fuel. Their vessels range in size from between 45,000 to 115,000 deadweight tonnage, and its fleet includes long range 2, long range 1, and medium range vessels. I'm not going to get into what every vessel is like, but the long range 2 ones are important. They're tankers that are around 800 feet long and are typically used on long trade routes carrying naphtha from the Middle East to Far East and diesel from the Eastern Hemisphere into the Atlantic. Now, while long-range 2 vessels are similar in size to Aframax crude vessels, they actually have coated tanks that allows them to carry both dirty cargo, like crude oil or heavy fuel, and so-called clean cargoes, including gasoline and other clean petroleum products.
Talk about numbers here. How did it do in the first quarter of this year?
Yeah, thanks to strong prices and demand, TORM reported strong financial results. That included total freight rates across its fleet jumping by 149% year over year to $41,717 per day. For the rest of the numbers, first quarter revenue was up 86% year over year at $390 million. Gross profit improved a whopping 191% to $216 million. The company reported an operating profit of $163.5 million. And that's like up 7-fold from $22.6 million in the same period last year. Net income was $153.6 million, or $1.87 per share.
I know stock market is a forward-looking animal. It cares a lot more about what is going to happen rather than what has already happened. How is the rest of the year looking for this company?
Really good for forward looking investors. A bigger fleet and higher freights bodes really well for TORM for the remainder of 2023. According to the most recent data, the coverage for the second quarter of 2023 was 64% at $40,086 per day. And that data came out early in the second quarter, and we're right now near the end of the second quarter. So who really knows what happened?
And what's happening with dividends here?
Well, going back a tiny bit, TORM had the misfortune of launching its dividend policy just as COVID wreaked havoc on the oil and gas industry, an entire global economy. It suspended its dividend actually in late 2021 and only resumed its dividend policy in the autumn of 2022, but it's been smooth sailing since then. Though if you look at the company's chart, you can see that the distribution fluctuates. In the first quarter, it paid a dividend of $2.59 per share. And then this past May, it declared a dividend of $1.46 per share, or $5.84 on an annual basis, for a massive yield of 22.74%. To put that into context, U.S. inflation is at 4.0%.
It's nice to see that high dividends comes with the rising share price. Yields move inversely to the share price. More often than not, a company has a massive dividend, but it comes with lower share price.
Yeah, this is clearly not the case with TORM stock, which is up 139% over the last 12 months. And those are big gains in anyone's books. But Wall Street analysts still think industry tailwinds will send TORM stock higher. Of those providing a 12-month share price target forecast, the median target is $37.20, with a high estimate of $40.89. What's important to note about both these numbers is that if it hits these targets, that puts its stock at record levels.
John, thank you so much for providing insights on TORM PLC. It is a pure play product tanker company that's reporting strong financial results, big increases in profits, and recently resumed its high dividend payments. Thanks to its growing fleet and rising freight costs, the outlook for TORM stock and its dividend remain excellent. That's it for today. We'll be back with another video soon. If you want to read more about John's ideas, you could head to incomeinvestors.com. In the meantime, don't forget to like this video and subscribe to our channel. We'll be back soon, and goodbye for now.